Hello, welcome to UTS Startups Confessions, where we talk to entrepreneurs that we respect a lot. This is a really special session for people that are thinking about being entrepreneurs, and particularly people that are trying to figure out how to fund their startup in a non-traditional way, which we'll get into in a second. But Nathan, thank you very much for joining us. Claimo is an incredible startup. Firstly, can we get a little warm-up round of applause for Nathan for joining us?
Thank you.
Of all things to do on a weird street corner with 1,000 people walking past while we do this, talking about your own story, it takes a special person, and thank you very much for doing it.
Glad to be here, thank you.
In 10 seconds, what is Claimo? So
Claimo is a claims management company, and we specialize in refunds of add-on insurance.
Okay.
So essentially what it is, we operate on a no-win, no-fee basis. We help advocate on behalf of consumers to get their money back, and we charge 20% plus GST for anything you get back.
Okay, what kind of insurance is that?
Okay, so what it is general insurance. We specialize in add-on insurance. So what it is, it's tacked onto personal loans, credit cards, car finance, mortgage. So any kind of credit-related facility, so where you borrow some cash, the bank or the financial firm tack on useless insurance policies. And what we find is they're often worth less than the paper they're actually written on. And it's not necessarily an easy process getting the money back yourself, because the banks are set up to fail the consumer. They're quite adversarial on occasion, so we're solving that problem by giving them a voice they didn't necessarily have in the first place if they were going to go and do it themselves. So all our staff are all financial services experts. They all come from the banking industry. They understand credit and insurance-related products. So they give the consumer their voice that they didn't have if they hadn't used this service, essentially.
Okay, so tell me why you care about that as a problem and your background before you came into Claimo.
Yeah, good question. So my background in the UK was financial services. So I worked on the side of the bank on the largest remediation project in the UK that's ever occurred. So the bank ended up paying £27 billion out. In the UK overall, it's about £56 billion. So pounds are worth more than dollars, obviously. And what I found myself playing the role of the consumer side of things, so always looking for the reasons to pay out the consumer, why they deserve their money back, and what we found essentially in the bank is the consumers weren't able to articulate the reasons, which is when the idea of Claimo was born, was back in the UK in about 2011, working on the UK's largest ever remediation project.
Okay, so you help kind of get $50 billion in some of it out of the banks to remediate these terrible policies, but you see it continuing to happen in other parts of the world.
Yes.
What did you do next to better understand the problem?
Okay, so what we did, I moved to Australia in 2014. It was only supposed to be for the work and holiday. Fell in love with Australia. A couple of years later, a banking royal commission happened where all the major banks were investigated. And there was about 2 weeks dedicated to this kind of insurance. And the reports essentially found that people were misled, wrongly sold, overcharged, and I identified exact same problems that happened in the UK were happening in Australia. So what essentially happened was I had the idea from the UK. I ended up getting a job with a startup in Sydney. I immersed myself into the fintech space, learned a lot of things on how to run a startup. After I worked for the startup for about 2 years, I ended up getting a job with the Financial Ombudsman Service, and that was kind of a tactical move to immerse myself into the Australian financial services banking system. So it was a pretty good move. The experience was pretty invaluable. Looking back now, it was more so than I realized at the time, but I really got to understand all the problems and the difficulties that the consumer faced whilst working at the Ombudsman Service.
See, this is incredible. This, for anyone watching that kind of skipped over that part and wasn't paying attention, I've never heard of someone going to work for an ombudsman or government to better understand a problem that you were already dealing with in banks.
Yeah.
Like, what kind of insights did that give you that you couldn't otherwise get?
Okay, so the Ombudsman Service is doing a great job, but they can do better. can always do better. And what we actually found is that the consumer didn't necessarily understand the technical jargon or the financial language that was being used in a way that resonates with them. So essentially what I found is that when we were doing the research or the investigations into mortgages or the car loans, people would talk about the policies, but they were like, I don't even know what this is. So I realized then that they might have had an issue at the point of sale that they didn't necessarily know they had. So my job wasn't necessarily to look at the add-on insurance. It was just by default, I was doing some work and then people were talking about these add-on policies and they didn't recognize them or knew what they were. So I knew that there was a problem in the UK, and also as well just working alongside the Ombudsman, the legal counsel in Africa was a very, very beneficial experience. It made me a better person, more professional, it was just a good experience for me working at Africa.
Okay, so that sounds nice and kind of safe working for government in that kind of thing, or pseudo-government. How do you then take the plunge from that into being an entrepreneur?
Yeah, so essentially what I did, I made sure that I'd had enough savings to survive for the first 3 to 6 months of setting up the business. I always knew I was going to do it, so it wasn't really an option for me. It was a very safe job, it was comfortable, it was great, I had all these benefits. And then eventually I took the decision to do it after about 9 or 10 months into the role. And then I moved to Melbourne because it's a cheaper cost of living than Sydney. So I spent about 3 months in Melbourne just trying to figure it out. And then, and then just went from there. Resigned from my position, moved to Melbourne, back in Sydney.
Okay, I'm glad you're back. So what is Claimo at that point? It's a website that someone set up?
Okay, so it was a friend of a friend who built the website. He had all the access to the back end. I couldn't even update my website. He's a software developer by trade. So it was always pretty difficult to get the updates I needed. But we had a minimal viable product that we could basically make an inquiry. The inquiry gets notified to the company email address, and then I have some contact details to correspond with the consumer. So that is essentially what Claimo was. Just the website, my email, and my phone.
And then processing all of these manually of people that are not able to get their claims through?
Yeah, so it's a very manual process for the first 3 to 6 months, I would say. 3 months, yeah, definitely. And then essentially what happened was I had to try and figure out a process on how to get to my customer. So there's a lot of 2 months of doing a lot of nothing really, because there was nobody to speak to. I didn't know where they hang out. I didn't know what they discussed. I didn't know where they were. And then it was just a chance conversation in the January. So January 2020, so set up in November. So it's about 2 months into trying to figure out the process. It's just a chance conversation from a networking group. A lady told me that she had the insurance. She converted as a customer because I told her about my service. And then essentially from there, she told me how she'd found about the industry. So she'd found out about add-on insurance and getting refunds on a community Facebook page. So that's when she introduced me to the community. I just became a little answering service there, answering all the questions from the consumers. And then one night I woke up to 60 inquiries on the website. So.
Okay, so there's all these concentrated pools of people in discussion groups and forums and things.
Yeah.
And as soon as they hear that there's a service to take care of this problem, they're just lining up and applying.
Yeah.
Wow. Okay, so then it turned into an automation problem?
Yes, so it was an automation problem. We solved that from some off-the-shelf software providers at Atlassian. I think they had a product at the time that was free to use, that was good for managing customers. And then obviously after about 6 months, you start turning revenue. You can start affording to put it into technology. We ended up investing in Salesforce and it was invaluable to us. So partly automated at the time, partly manual, but it saved us a lot of time compared to the first 6 months of operation. So yeah, if I was gonna look back, I would probably invest straight away into something like Salesforce early on, just to make my life a lot easier than what it was initially.
Okay. So making money, growing, kind of captive audiences that you can just tap into, fish in a pool, sounds great. How did you, would you not just sit back and allow that to grow? How did you look at growth at that point?
How did I look at growth at that point? So it moved pretty quickly. So January, I was pretty busy from January onwards. And then I think we got to the May, and it was just me on my own servicing all our customers. And then we woke up to something 200 inquiries. And then the next week was another 200 inquiries. Obviously, I can't call 200 people a week. So I had to bring somebody else on board. And then the 200 inquiries were turned into 1,000. So yeah, you've just got to just keep up with the growth. Not necessarily as quick as that we want to at that stage, but great problem to have. 1,000 inquiries overnight. So we just did our best to try and get in contact with them all.
Okay, so I'm pretty sure you would have had VCs talking to you or maybe approaching you saying, this looks pretty good, can we get involved?
Yeah, so we had a couple of high-profile investors who approached us pretty early doors. So that was about 6 months into the business after the second person came on board, who's now the director, and not the other director of Claimo, Nicola. And they approached us with the view of investing into the company. So it was our first experience of capital raising. We had never done it before. We didn't understand what we were getting into. So that's when we took on a independent advisor at the time who was there to navigate the process, because something that we didn't know what was about to happen. So 3 months into the process, we were about to get into bed with each other in terms of signing contracts. And then things just changed then. They changed the goalposts in terms of the times, the size of the valuation. So it was essentially 3 months of wasted time for us. Probably impacts us in ways that we'll never understand today, because we could have used that time to service all our customers, going through our first real high growth phase of the business. Yeah, so that was our first experience in capital raising. It's a bloody awful experience. Wouldn't recommend it in the first 6 months of setting up your business if you've got high growth, but that's my own humble opinion.
Okay, well, this is one of the reasons I wanted to talk to you, because you ended up taking a different pathway that I think not enough people understand.
Yeah.
Can you talk us through that alternative pathway?
Okay, so I think you're referring to capital-based, revenue-based funding. Sorry, Noga, you're here. So revenue-based funding, essentially it's an alternative solution. I'd followed Matt Allen, who's the CEO of Tractor Ventures for a long time before setting up Claimo. And he announced that he was setting up this new style of raising capital. So essentially what it is the loan to the business. You repay back on the size of the revenue. And we essentially engaged a couple of conversations with the CEO, Jody Imam, and it was easier than a trip to the dentist. So after our first experience, it was a no-brainer. So for us, it was just a good fit. It allowed us to remain in control of the business, making the important decisions of the business. We still maintain control, but we also have the advice and the expertise of all the founders and all the connections tracked at. So yeah, it's a win-win, especially for founders like myself. So.
Okay. Could you talk through a kind of hypothetical example without disclosing anything you can't disclose? So for a typical company? Yeah,
for a typical company, I'm not sure about Tractor. Nog is probably the best person to speak to. But essentially, if you get numbers on the board and you back yourself in terms of a founder and the business model, I would highly recommend you consider revenue-based funding as an alternative solution. Because essentially, equity is worth more than anything else that you're going to come across in your business. And so maintaining as much equity as you can for as long as possible is probably what you want to be aiming to do. Because at the end of the, if you give away too much too soon, it's probably going to cost a lot more than it essentially is in repaying back a loan, in my opinion, not financial advice.
But they come along and say, okay, you have this amount of revenue.
Yeah.
Do you have an idea of what they're looking for in revenue?
Nog is probably the best person.
What's that number, Noga?
So you need to be doing around 30k MRR to consider
taking
this in debt.
That's 30k MRR, and then you're able to raise capital and then pay it back from the revenue that's coming through?
The way it works is you repay it as a proportion of your revenue each month. So we share the risk with you. So unlike a normal loan, which usually startups can't get access to anyway because banks won't loan startups money. There's nothing to secure the loan.
Yep.
But that just gets paid back on a straight line. Each month you have to make a certain payment, whereas with RBF, it goes up and down depending on how your revenue goes. So if you have a better month, you pay back a little bit more. If you don't have a strong month, you pay back a little bit less.
Okay, so basically, for anyone that couldn't hear that, it's depending on the performance of the company. There's a baseline amount paid back per month, and then if you're outperforming, it's a little bit more. But you're able to effectively pay back that amount that you took out to grow the company.
Yeah, that's right. Yeah.
Okay, fantastic.
So we see a lot of companies doing it. Maybe they're thinking about taking on venture funding in the future, but they want to be able to invest in the company to reach a particular milestone or inflection point so they can raise a better valuation. So maybe they take a bit of debt, they grow the company, and then when they do raise capital, they're diluting less because they've grown the company to a better point, they've got a better valuation when they raise.
Okay, I love it as a model. It's something I don't see enough people considering as an option, and I think they should. So, Claimo, what does it look like from here? What do the next couple of years look like?
Okay, so we've gone from a team of probably 3 or 4 last year to a team of 20 now. So we've got big goals for next year, and we look, in the UK, we went from 10,000 complaints a week at the major bank to 30,000 to 50,000 complaints a week. So to be able to service those kind of numbers, you need a lot of people and you need a strong platform. So that is essentially our goal for the next 12 months. Bums on seats and technology. That's what the future looks like.
Okay, and so the ombudsman not going to be needed in future? Do we dissolve that?
Yeah, so a lot of the banks don't resolve their disputes because they like to say that they've done nothing wrong. So essentially we need to escalate at the financial ombudsman to have an independent view. So the good news about it is we've got 5 years ahead of everybody else in Australia. So it's a bit of a hand-holding exercise. You've got to educate why customers should get the refund. And then we're essentially looking for that to change in the next couple of years where everybody gets on the same page in terms of just resolving complaints rather than escalating complaints, which is not good for anybody really. We just want to resolve the matter as quickly as possible.
Sorry for one more question about Tractor,
Yeah.
but do you think this kind of growth financing drives you to behave differently to a normal kind of VC investment?
I don't know because I've never taken on VC investment, but I can only speculate. I would say yes, because if you're a VC, I would imagine you'd be looking at different things that I'm looking at. So you could be looking at the risk of, say, for example, legal disputes and stuff like this, but we're not looking at that. We're looking at resolving stuff with the financial firm at the time. If you're going for a VC approach, and this is me speculating again, you could basically go in as quick as you can just to put numbers on the board and essentially doing the wrong thing. So we're trying to undo the wrongdoings of the Royal Commission. So it's more of a marathon rather than a sprint. So yeah.
So perhaps a better experience for the customers and a more kind of considered growth.
Yeah.
Okay,
So,
interesting.
yeah.
Sorry for going down that path.
Yeah.
So this was your first entrepreneurial experience.
Yeah.
How has that changed you as a person?
How has that changed me as a person? Yeah, probably a lot more resilient. I don't let things that are outside of my control bother me anymore. I'm a natural worrier by default, really. And I suppose that I worry less now, even though the stakes are higher in terms of my responsibility. Things outside of my control, I don't necessarily worry about anymore. Just the things that I can control is growing the business, making sure the customers and my employees are happy. That's my only focus right now.
Okay, cool. And for all the potential entrepreneurs that are watching down the camera, do you have some advice that you wish someone had given yourself before you started out?
Keep doing what you're doing. Turn up to these UTS Startups meetings. You're already on the right path. You're already out of the game. So keep doing what you're doing, networking, set up some conversations tonight. Come and say hello later. Yeah, just keep going to the networking meetings. It's a good start.
Beautiful. On that note, I'll say every Friday at 3:30 we have these sessions. They're open to the public. Come to UTS Startup Central and join us. We're going to pause the recording there because we're going to get into Q&A with the audience. I will say this is the best audience we've had so far. Thank you very much for joining. I'm looking forward to some juicy questions in a second, but the people streaming this are going to miss out. We'll see you here in the space. But join me in thanking Nathan.
Thank you.